Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about EVERTEC Inc. Annual Report. EVERTEC Inc. offers a wide range of businesses and services to various clients across Latin America, Puerto Rico, and the Caribbean. The company's primary services include merchant acquiring, payment processing, and business process management solutions. Merchant acquiring services enable merchants to accept electronic payments from customers, while payment processing services allow financial institutions to manage and facilitate credit, debit, prepaid, and EBT card programs. EVERTEC also provides credit and debit card processing, authorization, settlement, and fraud monitoring services to issuers. In addition to these core services, the company offers business process management solutions that include core bank processing, network hosting, managed services, and IT professional services. These solutions cater to the needs of financial institutions, merchants, corporations, and government agencies. EVERTEC also owns and operates the ATH network, a personal identification number debit network, which processes approximately 10 billion transactions annually through electronic payment networks. The company's services are primarily sold and distributed through its direct sales force, making it a leading provider of transaction processing and financial technology services in its region. Unfortunately, I do not have access to the extracted summary. However, I can provide a general essay on what might cause a stock price to drop. The decline of a company's stock price is often a complex issue with multiple contributing factors. One possible reason for a decrease in stock value is poor financial performance, such as declining revenue or increased expenses that eat into profits. This can be due to various reasons, including market saturation, failure to innovate, or increased competition. Another factor that can negatively impact a company's stock price is regulatory issues or legal troubles. If a company is found guilty of wrongdoing or fails to comply with regulations, it can lead to fines, penalties, and reputational damage, all of which can harm the stock value. Additionally, changes in leadership or management can also contribute to a decline in stock price. A new CEO or board of directors may implement policies that are unpopular with investors or fail to execute on their vision, leading to decreased investor confidence and lower stock prices. Furthermore, external factors such as economic downturns, industry-wide trends, or global events can also impact a company's stock value. If the overall market is experiencing a downturn, it can be difficult for individual companies to maintain their stock price. Lastly, lack of transparency or poor communication from management can erode investor trust and confidence, leading to decreased stock prices. This can include failure to meet earnings expectations, lack of clear guidance on future prospects, or inconsistent messaging that creates uncertainty among investors. In the case of EVERTEC Inc., it is likely that a combination of these factors has contributed to its declining stock price over the past year. However, without access to specific information about the company's performance and circumstances, it is impossible to pinpoint the exact causes. EVERTEC Inc. maintains a market capitalization of $2 billion, broadly in line with the industry peer group. EVERTEC Inc. trades at a higher price-to-earnings ratio of 13 times and a higher price-to-book ratio of 2.92 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The leverage on the balance sheet appears elevated, with liabilities of 72% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. Net income experienced an increase from 2024 to 2025, with net income available to common shareholders rising from $112,000 in 2024 to $141,590 in 2025. This growth was also reflected in the overall net income, which increased from $112,620,000 in 2024 to $141,590,000 in 2025. Profit margins also saw an improvement during this period. In Latin America Payments and Solutions, profit margins rose by 16% from 10.5% in 2021 to 12.3% in 2022. Furthermore, the overall profit margin increased from 12.1% in 2023 to 13.3% in 2024, and then jumped to 20.4% in 2025. The reasons behind these changes are attributed to various factors. The increase in revenue is due to a diversified business model that enables the company to provide competitive products. Additionally, changes in revenue streams, operating expenses, and market conditions likely contributed to the growth in net income and profit margins. The financial performance of the company indicates a consistent generation of positive operating cash flow over the past 2 years. According to the provided summaries, in 2024, the company generated $260,059,000 in net cash provided by operating activities. This trend continued into 2025, with an increase to $227,007,000. Additionally, on page 75, it is stated that the company's cash flows from operating activities reached $91,036,000 in 2025. These figures demonstrate a stable and positive operating cash flow for the company, indicating a strong financial position. The company's debt level has undergone significant changes over the past few years. Initially, there was no previous year's value provided for total principal amount of indebtedness. However, by page 44, it is noted that term debt increased from $0 to $149.6 million. Furthermore, on page 45, a substantial increase in total debt is reported, totaling $1.15 billion due to the addition of 3 facilities: TLA facility, revolving facility, and TLB facility. Additionally, by page 69, it is stated that total debt increased from $965.3 million to $1,098.9 million. In terms of interest expenses, there are mixed signals. On one hand, on page 40, it is reported that interest expense decreased by $6.5 million, minus 9%, in 2025 compared to 2024. However, on page 47, interest expenses show a fluctuating trend: $5.6 million in 2023, $8.1 million in 2024, and $2.6 million in 2025. Moreover, on page 50, it is noted that interest expenses increased by approximately $5.6 million due to a hypothetical 100 basis point increase in interest rates. Lastly, on page 69, amortization expense related to intangibles and software packages increased from $72 million in 2023 to $99.8 million in 2025. The performance of various segments and regions within the company has been mixed. On a positive note, Latin America Payments and Solutions have seen significant growth in revenue, with an increase of $66.7 billion, as well as an improvement in adjusted EBITDA by $27.9 million. This trend is also observed in other regions such as Puerto Rico and Caribbean, where payment services has experienced a revenue boost of $8.5 billion and an increase in adjusted EBITDA by $3.3 million. Merchant acquiring has also performed well, with a revenue growth of $9.4 billion and an improvement in adjusted EBITDA by $5.7 million. Business solutions have also shown promising results, with revenues reaching $243,975,000. Latin America Payments and Solutions have consistently demonstrated strong performance across different pages, with revenues exceeding $342,898,000 on page 73 and $169,410,000 on page 75. However, not all regions have fared equally well. Puerto Rico has struggled due to high costs of electricity and a governmental financial crisis, leading to poor performance in payment services, Puerto Rico and Caribbean. Latin America as a whole has also faced challenges stemming from general economic, political, and social conditions. Management's outlook on the company is cautiously optimistic. They acknowledge potential risks and uncertainties, such as tax return examinations in various jurisdictions, but believe that these will not have a material adverse effect on the business. The company has taken steps to mitigate these risks by increasing its share repurchase authorization, allowing for future purchases of up to $150 million worth of shares by 2027. This move suggests that management is confident in the company's financial position and believes that investing in its own stock will benefit shareholders. In terms of strategy, EVERTEC appears to be focused on maintaining a strong financial foundation while also exploring opportunities for growth. The company's commitment to U.S. GAAP accounting policies and its emphasis on revenue recognition suggest a focus on transparency and accuracy in financial reporting. The company has made several strategic acquisitions and divestitures over the past few years. In terms of acquisitions, the most notable ones include the Sinqia transaction completed in November 2023, Technobank transaction completed in October 2025, and Dimensa SA acquisition announced in January 2026, pending completion. Additionally, the company acquired PaySmart Pagamentos Electrónicos Ltda, PaySmart, on February 16, 2023, and Sinqia SA Sinqia on November 1, 2023. Furthermore, EVERTEC Brasil Informática SA, EVERTEC BR, acquired 75% of the share capital of Technobank Tecnologia Bancária SA, Technobank, on October 1, 2025. On the other hand, the company has also made some divestitures. One notable example is when EVERTEC sold certain assets to Popular in exchange for $4.6 million on July 1, 2022. These acquisitions and divestitures demonstrate the company's efforts to expand its business and optimize its operations. The company has demonstrated its commitment to returning value to shareholders through both dividend payments and share buybacks. In terms of dividends, the company has paid out quarterly dividends of $0 and 5 cents per share in both 2024 and 2025. This consistent payout suggests a strong focus on rewarding investors for their loyalty. Regarding share buybacks, the company has made significant purchases over the past year. In 2025 alone, it repurchased up to $150 million worth of shares, with a total of 2,331,064 shares bought back at a cost of $69.3 million. This strategic move not only boosts shareholder value, but also reduces the number of outstanding shares, potentially increasing earnings per share. That concludes the financial summary for EVERTEC Inc. Feel free to comment below, and I will be happy to answer them when possible.